Hello guys, welcome back to this channel. Welcome to Forex Academy. And in this video, we're talking about the London and New York strategy using fair value gap. Right, so many of us are new to Forex, and in this video, I will quickly explain some of the basics of Forex trading. For you to get to know more about this strategy, you can watch out for the second edition of the manual that we're going to be releasing very soon. Stay tuned and watch out for it. In this video, we want to talk about the London strategy and New York strategy. How do you trade these sessions? Majorly, let me just call it session strategy, right? So many traders used to brag that they don't use indicators, they don't do this, they don't do that, right? This is very good and professional, right? But at the same time, indicators are meant to save time. Do you understand what I'm saying? They are meant to save time instead of manually. Let's say, for example, or in Nigeria time, London session start by 8 o'clock. So instead of you striking all the way looking for 8 o'clock a.m., right? So it's very stressful, right? Very stressful to be looking for 8 a.m. candle. So what we do is just make use of indicator, right, to help you plot out the sessions. And what are the sessions that we have? We have the Tokyo session, we have the Asian session, we have the London and the New York session. We also have the accusers, right? But in this video, we'll only focus on the Asian session, Tokyo session, London session, and the New York session. So stay with me, and I'm going to show you exactly how you can actually take advantage of trading with this session. Now, we understand the fact that most of the time that when market opens, right, what happens, there is high volatility in the market. You tend to see what high reaction in the forex market, especially when London opens or when New York opens. You see, for example, if price has been consolidating for some time, right, what we want to see is price to take out either the high or the low of this consolidation and give us a strong liquidity to the upside. So majorly, market has more of volatility during market session. Do you understand what I'm saying? So there is high volatility during these sessions. So what I'm going to start with, I don't want to make this video very long, so let's go straight into today's business. So what you want to do first is to come to your indicator panel, which is this button right here. So tap on it and type session, right? This session by Lux Algo, this particular now, this 31k, so 31 traders, more than 31 traders have actually put this indicator as favorite. How do you make this indicator your favorite? Just come to this left and slide, automatically it has added to your favorite, so you don't have to be typing and looking for it again. So once you tap on this, you automatically have it laid out on your chart this way, right? If you want to fine tune it, you can come to the settings, but ordinarily you don't need to go to the settings because it has automatically adjusted to your time UTC. So as you can see, this is 8 o'clock, right? This is the beginning of London session, and this is the very end of London session, right? So but you can still fine tune um, some things in the settings. Come all the way here. So the input session, you can fine tune this time zone, right? And in this, we have the range, which is this box that you have here. If you want to apply trend line to each session, you can apply trend line to that session as well. You can check out the mean, the VWAP, the max and minimum range, right? So this is just it. So for, let's say we want to focus on London session. All we need to do is, let's say we want to turn this to black, right? We've just done that. So that session will be named as black. So since we are focusing on London session, if you want to take out New York session and you want to just see London session alone, you can take out all of these other sessions so that you can focus on the London session, right? So if you want to see the dashboard, you don't need all of this. Show session divider, you don't need all of that. So if you prefer, you can still put all this, right? So you can mark the start and the end of each session, which is this. Can you see this black box, right? Showing each session. Now, since your focus is the London session, now I can just easily take out my vertical lines that I already drew. So you have something like this. Do you get what I'm saying? So let's check out for other session. Can you see? This is the range. Can you see? Here to here, right? Very, very perfect. So this is the session you want to focus on. I know that once you start having this box being drawn in the chart, it means you should start getting ready to take your trades. Do you get what I'm saying? So now this strategy does not work 100% of the time, but when it works and you follow the checklist, then you are 100% good to go. Do you understand what I'm saying? So let's proceed. In one of the checklists that we have is for us to highlight our London session. The next is to highlight any fair value gap. What does fair value gap simply mean? Fair value gap is when we have a displacement in the market. So when you have subsequent of three candles forming right above each other, right, without closing below each candle, right? Okay. So this is what fair value gap simply means, right? So when you have subsequent of three candle forming right above each other, so it's known as a fair value gap. And what is the gap and where is the gap? This is the gap. The candle at the middle is the gap. So this distance between these three candles right here is called this fair value gap. And what does this really mean? Now, whenever you see fair value gap, it means there's institutional presence in the market. There's big banks in the market. Do you understand what I'm saying? So there's big bank, there's so much funds on that particular trend, right? So afterwards, we see that okay, let's proceed into the strategy before I explain further. This is just the basic. This is just what fair value gap means. There are so many types of fair value gap entries. If you want to see more of this strategy, you can check down the link. I'm going to attach the link to the WhatsApp channel. I've sent some information that explains different types of fair value gaps and how you can take entries and how you can maximize the benefit from it. So let's proceed into the video. Now, this strategy also talks about that after we've highlighted our London session, right? We want to look out for the first fair value gap that forms during this session, right? The first FEG that forms during this session. Now, if let's say for example you're a scalper, right? You're a scalper, you can make use of the 5 minutes or you can also make use of the 1 minute time frame. So let's start from the basic. Let's say you want to start with your 1 minute time frame. I'm also going to show examples using the 5 minute time frame, right? So stick with me in this video. No, now this strategy simply says you should enter your trade at the first fair value gap of the London session. Now this is the beginning of the London session right here, this particular candle, and we said fair value gap forms after three consecutive candle, right? That is the fair value gap that forms. Now if you zoom out, let's zoom out completely so that we can highlight this particular fair value gap. So this is the beginning of the London session. This is the second candle. This is the third candle. Now, this is not a fair value gap right here. This is the fair value gap right there. Can you see the first candle right here, second candle, and the third candle? So this gap right here is the fair value gap. So we are going to mark this as our FAG. This is the first FAG that formed. And how will you take this sharp entry? You want to take your entry once you have a confirmation of a close above the previous swing high, which is this, giving us a cut, right? Giving us a change in character. So immediately you see that okay, we have a fair value gap, and this candles has also broken this particular high, the previous high before the London session. Please pay attention. The previous high before the London session, you are going to mark that. So let me also say this point at the same time. You mark the previous low as well. Don't mind, okay? You mark the previous low before the London session, and you mark the previous high before the London session. Remember, this is just the 1 minute time frame. I'm also going to show you how it also works on the 5 minutes time frame. Now, since you have a close above the zone, we're going to now take our entries, targeting 1 to 3 weeks to world ratio, and sometimes you can target 1 to 2 weeks to world ratio. To conserve, to protect your capital, you can take 1 to 2 weeks to world ratio. Now, let's proceed into this trade as an example. Now, you want to wait for a candle to close above that break, right? So, right, because price could decide to reverse back, but we have an FEG which is confirmed. We have a candle breaking out above the previous high, another confirmation, and we are going to take our entry after the close of this candle right here. Where will our stop loss be? It can be just below the fair value gap right here, or if you want to like minimize the risk, you can put it at the previous low. But let's just leave it this way. I will still explain how it works on the 5 minutes time frame. Now, this on started 1 to 2 weeks to one ratio. This is 1 to 2 already. Perfect. Can you see how you take profit just using this basic concept? So mark your London session, wait for the first FEG to form, mark your previous high and low, and wait for candle to break above either side of this range, confirming with this FEG and 31 to 2 weeks to one ratio. Now let's look at for another example. This is just the first trade. Afterwards, I'm going to explain the 5 minutes time frame and how you can actually take advantage of that. So let's proceed. We're going to be looking out for the first FEG in this session as well. Now let's zoom out. You need to zoom out because this is 1 minute time frame. So you need to really zoom out so you can get the detail of each candle. Now look at this. London session already started. But before we start, let's mark out the recent high and low. So which is this particular candle right here. Which is the straight. My phone line might not be straight, but let's take it as it is. You can use this and can use this, but you can see this particular low took out this previous low. So this is valid, right? This is valid. Now that you've seen this, okay, let me make it more perfect. Now the this is the setup. Now we've gotten the previous high and the previous low, right? London session starts, it's wicked out the previous low, taking out liquidity that is resting here, but we are not yet confirmed because there's no FEG forming right here. So let's wait for FEG to form. This is our first fair value gap. Like I said, these first three candles are our first our fair value gap area. So you mark this fair value gap area right here. Now, since you've marked this, what are we also waiting for? We want price to break above this, right? And close above it. Once price closes above it, we are taking our entry. That is just the method. Now you can see price rejected and finally broke out with this particular bullish candle right here. So with this is our confirmation. This is the bullish engulfing candlestick. This is our confirmation and we are taking the trade. So we want to go long after the close of that candle. Your stop loss will be right below the FEG and you want to target a 1 to 2 weeks to work ratio. Let's zoom out. 1 to 2. Okay, perfect. Now let's see if price hit profit. Can you see price hit take profit? Just this particular setup, you mark the high and the low of the previous candlestick, right? Before the London session. Now you wait for a fair value gap to form. This is the 1 minute concept. Wait for price to break either the high or the low. Now you could see here, price broke this particular uh, low as well. But you can see, but there was not any fair value gap, right? There was no fair value gap confirmation to justify the break of this, right? So we're not taking this particular bearish setup. This is a valid setup. Maybe let me just take one more example before we move on to the 5 minute time frame. So you could see how price boomed all the way to the upside. Now let's wait. Let's check out just one more example, and we go to the 5 minute time frame. Now let's zoom out. Like I said, once you're on the 1 minute time frame, you are advised to zoom out as much as possible. Now, what are we going to do first? Mark the previous high straight out, and you mark the previous low, which is this. Right now, after this has been completed, you want to look out for the first fair value gap that forms in this area. This is not valid. Why? Because look at the week. The week waked up more than 50% of this candle. If you want to learn more about fair value gap, join our WhatsApp community. So my students already understand this concept. This is not a valuable fair value gap, right? Now let's proceed. What's the next FEG? This does not have momentum. Can you see? Dodgy candlestick, no momentum, no structure. The same thing with this. Can you see? But this would have taken this buy entry because look at this momentum. Look at this fair value gap, kind of fair value gap right here. This is 1 minute time frame, so you expect to see reactions like this. So price accumulates in this area, it's manipulated and fully distributed. So this is accumulation, manipulation, and distribution. So price manipulated after accumulating right here. So you can see now would have taken a buy, and how would we have taken this buy? That's why I said this setup is not 100% guaranteed. In fact, okay, this is the favor look up right here. Right, but you can look at the strategy. It helps you to quickly take your losses very fast. Now we want to take, originally we want to take our entries right here. Sorry, just stop loss just below the FEG. You might want to be targeting 1 to 2, but you can see price quickly hit, take profit. Now how are you going to recover? You've already lost the first trade. How will you take your recovery setup? Remember that we still have liquidity resting right here, right? All we just need is FEG confirmation for us to jump into this trade, right? Let me repeat that again. We've taken our first loss, which was this bullish FEG, right? Now look at this, another opportunity played out for a re-entry. Now, if you zoom out, you could see this is another fair value gap that played out right here. So you want to mark that a fair value gap area. Some people preferably want to mark from here to here, and they have something like this. So you want to go short. Now, when will you go short? After you see price retraced into that fair value gap and retraced back out. So this momentum candle here is where you would have wanted to enter your stop loss just above that low right here. I want to target 1 to 2 risk to reward ratio. Can you see? Boom, you've recovered even your losses and more. So if you decide to break even, you can still break even to maximize your setup. So look at this, the same entry mode up, the same confirmation. Can you see? So this is for the 1 minute time frame. Now let's take out all of the drawing that we've done before, and let's switch to the 5 minute time frame. Now for 1 minute, I said is for scalpers. If you are very good at scalping, or you want to just scalp few profit, you can use the 1 minute. It presents you so much opportunities in the market. Now let's see how the 5 minute candle behaves. Looking out for the first FAG, this is a fair value gap right here, but you can see price has been consolidating, so this would have been a losing trade. Let's dip deeper, right? You want to take your trade on the debt, go long. Maybe after this particular confirmation candle, and see price reversed dramatically. So with this, you'd have taken your SL because price was ranging. You didn't even enter profit. So let's look out for another opportunity. Because see, price was ranging as well this day. Well, see, so you might wonder that some people will still take this particular trade and still make profit, and you took a loss. It happens because of the time frame. Can you see? Meanwhile, on this trade, we took kind of profit right here, right? But because we're on the 5 minute time frame, this is what we're getting, two losses. Now let's proceed to look for another entry. Now look at this beautiful entry. This is a bullish fair value gap right here. So if you were waiting for that cause, okay, let me quickly say this, right? Let me make reference to it in other tutorial I've done. Once you see the fair value gap right here, you want to wait for bullish engulfing candlestick above this fair value gap, right? This is an added confluence for you to minimize your risk. So you not just enter blindly, right? You want to wait for bullish engulfing candlestick above that zone for your entries. So with that, you'll be able to fine tune your entries. Now look at this bullish fair value gap, right? You want to wait for bullish engulfing, not yet. And look at that, price quickly reversed and giving us an IFEG, which is inverse fair value gap. Look at this right here. Now we've gotten this inverse fair value gap. What is next for us to do? Looking out for uh, bearish engulfing candlestick. Now this is a momentum candle, so we can't really justify that with this. So let's look for bearish engulfing. All of this are momentum candle. Can you see? No bearish. Okay, now we got bearish engulfing right below this. It must not exit this. So this is where we take our entry. With this, you'll be able to fine tune your entries, right? So you want to take your entry right here, stop loss above the FEG area, and you target your 1 to 2 weeks worth of share. So boom, got that clean, take profit. Now let's continue with this. Let's do one more example before we end this video. And look at this bearish fair value gap right here, confirmed. You can always combine this strategy with other concepts like SMC, price action, right? You can always combine this with it. So bearish engulfing, bearish let's go fair value gap right here, and we're looking at for bearish engulfing. Look at this bearish engulfing right here. I told you bearish engulfing must happen above this fair value gap, not here. We're looking for it right here, like below this FEG, because we're looking to go bearish. So remember, this is the 5 minute time frame. So you want to take your entry right here at this close of the bearish engulfing. You must have your checklist, your stop loss right above that zone, and your take profit 1 to 2. Let's see whether we hit take profit. Just with this, can you see another take profit right here? So it does not guarantee 100% trade all the time, but with this you can end your week profitably. So you can see London kind of um was ranging right here. So looking for the first FEG again, like this FEG right here. Although this is a bearish candle, well, it is what it is. Now we've got the FEG right here. We're looking for bullish engulfing, bullish engulfing, bullish engulfing, bullish engulfing candle. Here we got a bullish engulfing candle right here. In fact, we got it here. So let's take our entry of a buy. Want to go long. For those that are just joining, bullish engulfing simply means a candle that engulfs the previous candle. Let me give you an example. Assuming this is a bearish candle and this is a bullish candle that engulfs it totally, right? That is much more bigger than the previous candle. So this is engulfing candlestick. So with this, your stop loss just below that FEG zone, right? And target of 1 to 2 risk to reward ratio. So with this, let's see whether we hit take profit. Yeah, we hit take profit with this same entry. So with this, we're able to fine tune our setup, right? We're able to fine tune our setup. Let me do this. Now, most people would be like, where are we actually setting our stop loss? What is the psychology behind the stop loss, right? So this is. Let me just quickly answer that, right? For me, I prefer that you mark your stop loss right below the FEG swing low, which is this area right here. This swing low here, just for proper risk management. But still, on this particular trade, we hit take profit. Price, we got stopped out, right, before price move forward. So I believe I've done justice to this London FEG setup. Let's just do one more. Picking up random trades. Okay, let's pick this, but it's not valid. This is not valid. This is not valid. This is not valid. Let's still look out for a valid FEG. This is almost there. Almost there. So let's zoom out. These are just momentum candles. Can you see momentum candles? So I can't really say that there's a valid FEG right here. But if you just want to take like wanted to just jump on the straight, look at this. One, two, three, and there's a gap right here that formed. Can still make use of this. Bullish engulfing candlestick. You can take this as your bullish engulfing, or you take this particular candle right here. See, it's formed above this FEG, and if you want to take a trade, you will still jump on this trade like this. Your stop loss, the FEG level, right, or below that, any whatever stop loss that is convenient for you, right? 1 to 2 weeks to word ratio. Let's see. So on this trade, we're not able to hit take profit, but okay, let me see. Let's continue. See whether we hit take profit. Wow, we finally hit take profit on this trade. Can you see full TP done without your SL being hit, right? So depending on how you feel your SL can be, can make it this swing low right here, the low of the FEG of the London session, or you just put it below the FEG zone. Either way, that is convenient for you to protect your account. So this is just the basic of the basic trading the London session. So the same concept applies to New York section. So let me take out all of this and just mark New York session alone. I'll just show you. I'll not be going deep into that. I'll just show you how it works as well. Taking out London session. Now this is the New York session. Right, so I think we got the first FHE here. Can you see? It's formed right here. After that, bullish engulfing, which is this particular candle right here. Bullish engulfing above this zone. In fact, we will had it here. Let's just say we want to make use of this either ways. So want to go long and the stop loss below the FAG or this particular low right here, whichever one that is convenient for you. Like I said, so you can put it right below the FAG right here and target 1 to 2 weeks to what we show. Okay, can you see full TP before markets dumped? We spiked into the TP zone, right? So this is New York session. So if you miss the London session, you can also apply the same concept in the New York session. If you miss the London session, you can apply the same thing on your um on the New York session. Now you see with this strategy, I'm not even doing top down analysis, I'm not doing trend line, I'm not doing support and resistance. I'm just giving you simple and basic entry model. So in our next video, I'm going to be doing more of proper analysis, more of professionalism, putting in all the market structure and sentiment and all of that to spice the market up. So can you see right here? Look at this example. The first FEG that forms this weak rejection. Look at this FEG right here. Right? FEG has been formed the first bullish engulfing after the FEG above the FEG. Look at this particular candle right here. But see, your stop loss is way far behind. So you don't want to jump on this unless if you want to minimize your risk, right? You don't want to drag all your stop loss like all the way down here. It's crazy. It's so much. So you want to just minimize it. You can put it here. This is a reasonable area as well. Look at this particular area for your stop loss and 1 to 2. You couldn't get a 1 to 2 here. Well, we're able to get a 1 to 1. Yes, we're able to get a 1 to 1. Let's do what we share. So it happens just this is just a basic and basic concept, right? But this would have made quite some money depending on the lot size that you are using for this trade. And now, so that's just the end of this video. Trading London session with FEG areas. So you can backtest it using other currency pairs and see how it plays out. Give your review under the comment section. Make sure you like and subscribe to this YouTube video.